Welcome back to our channel. In today's market overview, we see that US stock futures are sliding and the dollar is on the rise. We're seeing a sense of anticipation ripple through the market as investors worldwide keep a keen eye on the Federal Reserve's looming policy decision. This comes amidst renewed concerns about higher US interest rates, which have been casting a shadow over the global financial landscape. The possibility of a rate hike has sparked a flurry of activity, stirring up a whirlwind of speculation and predictions. As the dollar gains momentum, it's clear that the financial community is holding its breath, waiting to see what the Federal Reserve will do next. It's a game of economic chess, with every move potentially triggering a cascade of global reactions. With all eyes on the Federal Reserve's upcoming decision, investors are bracing for potential implications on monetary policy. The market's pulse is quickening, and the anticipation is palpable as we wait to see how this will unfold. Moving on to the Asian markets, a risk-off mood prevailed in a holiday-thinned session. This happens when investors, wary of potential risks, retreat from equities and flock to safer assets. Now, let's take a closer look at specific market movements. Starting with Japan, the Nikkei 225 index, one of the major stock market indices, recorded a decline. This shift reflects a broader trend of caution in the face of uncertain global economic conditions. Meanwhile, down under, Australian shares also followed a similar trend with a noticeable downward slide. But the story doesn't end there. The S&P 500, a key indicator of US equities, fell significantly as well. This drop follows a sudden spike in US labor costs, which can signal potential inflationary pressures. Such pressures, in turn, reinforce expectations of prolonged high interest rates, adding another layer of complexity to the financial landscape. The S&P 500 also fell significantly, following a jump in US labor costs, reinforcing expectations of prolonged high interest rates. In the currency markets, the dollar saw its best daily gain in over 2 weeks. This notable increase showcases the dollar's strength amidst the current economic landscape, where investors are grappling with mounting concerns over higher US interest rates. On the other side of the Pacific, the yen held its ground, maintaining a steady performance despite the overarching risk-off sentiment permeating global markets. Meanwhile, let's shift our gaze to a key indicator of short-term interest rates: Treasury 2-year yields. After reaching their highest level since November, these yields have flattened. This shift could suggest a pause in the rapid rise of interest rates, a factor that has been a significant driver of market trends in recent months. This flattening of yields, combined with the dollar's gains and the yen's stability, paints a complex picture of the currency markets, one that's marked by uncertainty, yet teeming with opportunity. Treasury 2-year yields flattened after reaching their highest level since November. In corporate highlights, Japan's Lasertec Corp shares surged after reporting strong order growth and beating third-quarter earnings expectations. The company's impressive performance is a bright spot amid recent market fluctuations. In contrast, the gold market steadied after a recent decline, while oil prices continued to slip. The easing tensions in the Middle East are seemingly having a calming effect on oil prices, signaling potentially lower energy costs for consumers and businesses in the near term. Moving on to the Federal Reserve's outlook, officials are anticipated to maintain interest rates for the 6th consecutive meeting. This decision signifies no immediate plans for cuts, despite higher than expected inflation rates. This stance is largely in line with market expectations, and it reflects the central bank's confidence in the strength of the US economy. Fed Chair Jerome Powell's recent remarks highlighted persistent inflation and strength in the labor market, suggesting little change in policy direction. Finally, in corporate news, Amazon.com Inc. reported robust sales for its cloud unit, driven by increasing demand for artificial intelligence. The tech giant's cloud services have seen a remarkable uptick in the first quarter of 2024, reflecting a growing trend towards digital transformation and data-driven decision-making in businesses worldwide. On the other side of the spectrum, Advanced Micro Devices Inc., a leading player in the semiconductor industry, offered a lukewarm revenue forecast for the current period. Despite the ongoing global chip shortage, which has heightened demand for its products, the company appears to be treading cautiously. This conservative outlook could be attributed to various factors, including supply chain disruptions, geopolitical tensions, and a competitive market landscape. And that wraps up today's market update. What are your thoughts on the current trends? Don't forget to like and subscribe for more updates on financial markets. Thanks for watching.